Hi, I'm Tom Lydon, editor of ETF Trends, here in Chicago at the Morningstar ETF Invest Conference. And I'm here with Steve Cohen, Managing Director of ProShares and ProFund. Steve, thanks for being with us.
Thanks, Tom. Great to be here.
Listen, ProShares, talk about innovation, right? You guys are probably one of the most innovative companies in the ETF world. Tell us a little bit about your thought process and really what you're focusing on.
Well, Tom, we're still clearly in the aftershock of the '08 financial crisis. And we're seeing a lot of money still on the sidelines, a lot of investors still on the sidelines, concerned about managing risk. That's why we've had this incredible, unprecedented run into bonds over the last few years. Now investors are starting to understand that there may be some risk in their bond funds and their individual bonds. So the next natural conversation is alternatives. How can I manage risk better, manage volatility? I'm approaching retirement. I can't take a big drop in the market. And that's the conversations we're having with investors who are really interested in alternatives for that reason.
So you not only create the tools, but I know you've got a team, including a bunch of people at the top, that really work with advisors to help educate on strategies. And you mentioned fixed income. After 30 years of declining rates, we're probably going to get some higher rate headwinds coming. And I know right from the top, you've got ability to hedge rising rates, you've got volatility, you've got inverse and leverage, you've got a whole suite of tools that more and more advisors are using to move away from the pure 60-40 asset allocation, right?
Right. Look, our strategy is to really get investors over the hump with alternatives. You know, the traditional obstacles in the way have been access, transparency, liquidity, high cost. So if we can marry up solid alternative strategies with what some might call the state-of-the-art delivery vehicle, ETFs, we now have the ability to provide a full toolbox of whether it's private equity, merger arb, long short, ETFs that all are low cost, transparent, liquid, and give access, get people into the alternative space.
You're not shy about introducing new products. What are some of the areas as you talk to advisors? What are they interested in? What are they most concerned about? What strategies are you hearing about that they're implementing today that are of most interest to you?
So, look, on the fixed income side, with the tremendous flows into bonds, especially if you think about the low interest rate environment, the flows into high yield. People are starved for income.
Yep.
High yield and credit is the natural place to go. However, in a rising rate environment, more investors are starting to become aware that rising rates can erode a bond portfolio. So there's risk there. We created an ETF, HYHG is the ticker. It's an interest rate hedged high yield bond fund. So it's a diversified basket of high yield securities. It's got a interest rate hedge built into it using Treasury futures, and we target a duration of zero. So there should be little or no interest rate sensitivity, which really speaks to the issue in the marketplace now.
So you can actually engineer that to target a zero duration.
Yes.
That's great. That's great. So would you see one of your biggest challenges is actually educating advisors on the nuances of the tools that you're building?
Absolutely. You know, again, when you think about the business we're in, it's early stage. It may be the second or third inning, right? There are broker-dealers out there calling for allocations to alternatives of anywhere from 15 to 45%. The problem is, how do I get there? And there's still a bit of a lack of awareness about how broad the toolbox is of alternatives in a liquid form. There are over 300 alternative ETFs now in the market. So for us to be able to go out there and give an advisor or a rep the idea of how to use a product, how it works, how it fits in the portfolio, that's what we're spending our time doing.
Yeah. Well, and I know you do great research, you do great white papers that if you go to ProShares.com, you can get those. It's always nice to be at a conference, but not many people can travel these days. We've done webcasts together that I found extremely educational, and then you folks have been big sponsors in the virtual conferences, and we expect to see you more in 2014.
We hope to be there, and we're glad to be there.
Yeah, well, thanks, Steve. Thanks for your
Tom.
time today. Appreciate
Appreciate
it.
it.
Thank you.